guess I'd pull it right back and make
Well,
it
welcome to Before the Weekend, your go-to real estate podcast where we are cutting through the noise and delivering what truly matters. I'm Kasey McDonald and I'm with my fabulous co-host Peter Schravemade, and each week we are discussing what's coming up in real estate, what's been in the news just in time before your crack a beer. How's your week been?
Busy, but good. Full is the way I would put it. I do distinctively remember a time where you and I could travel fairly freely from airport to airport and have it not affect us greatly. Another sign of age. Although I have to say that was some kind of record. 5 keynotes in 4 cities in less than 30 hours is a personal record for me. So I don't know if I want to do that very often. Yep. It was a good effort and lots of fun. Good to see everyone around the traps in Melbourne, Sydney, Brisbane and Adelaide. So, that has been a big week. What about you?
Yeah, look, busy week, obviously, with the Real Flow team, out and about seeing customers. So I've done a bit of travel myself as well this week, more in the regional landscapes, but actually really enjoying getting back out and hearing, listening, seeing what's going on in the ground of our real estate industry. And I think for us this week, it's probably a bit of a confidence reality check, maybe, I think, is what I'm hearing, seeing out there. We've got buyers becoming more cautious. We've got investors reassessing policy. At the same time, we've got auction clearance rates softening, property prices through Sydney, Melbourne are dropping. But as well, I had the pleasure of interviewing Avi Kahn from Ray White AKG, where we really focused on leadership, culture, training, and he shared his thoughts on where the industry is going. So really looking forward for our listeners today to hear that interview upcoming in our podcast.
Yeah, and action-packed week as far as news is concerned too.
Absolutely.
We've had to cut a few articles, and there's some even just streaming in this morning, right? So we're really trying to get through a bit to keep you guys informed out there. Obviously aware that some of our listeners don't travel to the extent that we do, so we're just trying to get bits from around Australia and throw them in as we feel as though they're important. But we're kicking off today with, I suppose it's the number one nationally, right? We've had a lot of conjecture about we've had the federal budget. And in response to that, there seems to be a fairly large property market correction. I think that's what most of the pundits are talking about at the moment. Everyone's pointing to national auction rates falling below 50%. And then there's this broader discussion around, is that a normal market correction or a beginning of a broader downturn? What are your thoughts, Kasey? Where are we going with this?
Yeah, look, I don't think the market's stopped moving. I just think that buyers and sellers now are simply not agreeing on what the value is. And potentially we've got vendors thinking that my property is still priced at this level. And we've got buyers going, well, no, I don't think it is. And there's now more on market or coming to market. And so I think it's definitely being seen as a correction for sure.
Yeah, well, it was interesting because I came from REISA, REISA Revolution, fantastic conference put on by Kane Cook down there in Andrea. They did a fantastic job. Jacob Kane was down there as well, and he had the opening, stage. He shared that with Kane Cook. It was the two Kanes, Jacob Kane and Kane Cook. So the two Kanes had the stage, and they were talking about a bunch of things in the market, but it was a really... It was really interesting. Like he was talking about the budget. REIA, just in case you're wondering, the Real Estate Institute of Australia have been lobbying the federal government. I know they have been. Scott Rollison's been doing a fantastic job behind closed doors there. And they whilst they were aware, or there was a bit of a noise around this, I think that position was not that tax reform shouldn't happen, but Jacob said something that we've said on the program, where he talked about we need to solve for the supply issue before that occurs. And that almost everyone I've spoken to seems to have known that should have been the case. And so, what I think we're seeing at the moment is a bunch of people with their hands in their pockets. And whether that's buyers or sellers, I actually think both sides of the market at the moment are going, bad time to sell. Auction clearance rates are down. Purchases, I'm hearing all of this. The price of properties is falling. Domain had an article yesterday saying that Sydney house prices could fall by as much as 122,000. That's like that article's a bit sensationalist. They were talking a percentage, and some reporters then extrapolated that out. But whether that happens or not, every time we have these articles, it actually affects the market itself. So, is it a case of the markets are actually falling, or is it just or the prices are falling, or is it just a case of people with their hands in their pockets at the moment? And I from my perspective, I'm one of them. I had a property on the market in Central Queensland. I'm likely to take that off soon. I can't see it fetching the price that it needs to. Not in this market. There aren't a lot of buyers. It's a particularly niche type of property that was out there. And before the budget, everything was bubbling along. We were getting great interest in it. I think I had, up to 9 bites, if you want to call them that, or leads generated on this property, and they all evaporated straight after the budget. So, like on the front line, I can actually tell you how that budget has affected my prospects of selling. Whoever was looking at that is not looking at it now, and ironically, it's a block of land. So, the whole change of the budget was supposed to be about getting people to build on land. Well, I can tell you on the front end, all of the developers that were looking at that have just dissipated. They've gone into nothing. So I don't really think that's I think there's a lot of that around the market. People are just going, why don't we wait this out? Why don't we see what happens? Like, no one seems to want to jump first, if you know what I mean.
Yeah, and I think always typically, certainly from my experience and having an agency, you'd probably remember too, but, sort of that June, early kind of piece of July, the market seems to slow anyway. We're kind of coming into that end of financial year. People are assessing values of their homes. They're doing their tax returns. They're understanding, learning to understand what their next move is. So, I think definitely we have seen a mental shift in those agents that I am talking to. I'm hearing, they're letting me know a lot of investors are ringing and saying, should we sell? What should we do? What's the rental market doing? Do we think we can get more rent? Because now, this is potentially impacting us. So the property managers are now also being faced with these types of questions that they're probably not trained and skilled to also answer.
Yeah, I've heard quite a lot of that. Like, one of our companies is called Zappio, and they're right on the front end of tracking property portfolios for investors, and they are very much saying that there is a lot of investors out there requiring advice at the moment, and that I can understand that's coming back to the property management. Poor property manager is now a trusted financial advisor as well. By the way, if you're handing out financial advice and you're a property manager, perhaps don't do it.
Yeah. On that Sydney and Melbourne article, though, Pete, just if we could just quickly digress back. Domain actually mentioned, obviously, markets like Brisbane and Adelaide were going to kind of remain fairly consistent, or in fact continue to grow.
Yep.
What's your opinion on that? I think, for me, the Brisbane, Gold Coast, kind of Sunshine Coast, this kind of pocket of Southeast Queensland certainly is a lifestyle appeal.
Yep.
You do a lot of travel in Sydney, Melbourne, etc. And probably still sits at somewhat an affordability piece. But in saying that, though, I heard on the news only a few days ago that there's prices in Western Sydney. Houses are going for now $850, $900, and they have not seen that in years. Whereas you can't still probably get that in Brisbane or Sunshine Coast or Gold Coast, to be fair.
No, that's right. Well, we've had both Tim and Jacob as well has said it at REISA, saying that they both think affordability's reached a ceiling, particularly for tenants. If you're an investor, there's not a lot more dollars to soak out of that transaction. But, I think Jacob mentioned that Sydney, Brisbane, Melbourne, Adelaide and Perth are ranked in the top 15 of least affordable. They're right all high up there. And, travel to the US, like here I was staying in the US in Houston of all places last last year. 100 meters away from the heart of the CBD, I can buy a 4-bedroom townhouse for 450,000 US. Name me a capital city in Brisbane other than Melbourne. Granted, Melbourne,
Yeah.
and maybe to an extent Tasmania, but with the rest of ours, you know, if you're looking at that in Brisbane, that's got a 3 in front of it and 6 easy. You know, it's easily 3 million for a doer-upper. That kind of thing, and you're not going to find a 4-bedder. It'll be 2 or 3.
A studio, even.
Or a studio. Yeah. So, like, I don't. Yeah, we are definitely stupidly unaffordable, especially when you look at other similar first world countries. The bang for buck as to what you can pick up there is much deeper. So yeah, I don't. I think what we're seeing is we're going to see a bit of a correction. The prices are going to come down. I think that's the only way it can go, to be honest. And I think what we're seeing right now is uncertainty over. Not necessarily. I think the budget has compounded it, but I think it's the uncertainty caused by the fear of the unknown. Like the budget's come in, we don't know what's going on here. Buyers and sellers don't know what's going on, and so the market's really at a standstill. And they're getting hammered, like the federal government, rightly so, and they've done a backflip as well because our second story is on the Labor's property tax changes. So the Greens have stepped in this week. So if you're listening to this podcast and you're unaware of how the Australian the Australian government system works, we have a Westminster system, which means that we have a lower house where most of our rules and regulations are devised in that lower house. Then we have the Senate, which is the upper house, and the checks and balances are supposed to happen in the Senate. So if something is clearly not the will of the people, we would expect the Senate to step in, or the members of the Senate to step in and go, look, we're going to block this because we think it's in the best interests of the nation. Well, you know, the emerging scandal this week is that the Greens have stepped in. They must be aware it's not the will of the people. I've never seen a backlash like this to a budget. It is very vastly unpopular. And the Greens have stepped in this week and said, look, we're going to ignore that. And we're going to ignore that and we're going to pass this, but only if you tick off on these other things. And one of those is superannuation. So I'm yet again smashed by that. I was about to buy a property. Like, it feels like there's somebody up there going, screw you, Pete. We're just going to cross all these things off the list. We had just been getting finance to buy in our self-managed super fund, and the Greens have done me a number on that one. So going to have to look at different options there, which is just ludicrous. How dare they tell me what I can invest in my super fund? Yeah. Like, how are they the suppository of all wisdom on this, that they could step in and do that? But that's what they've done. And so now we're in a system where, look, for as far as I can see, I don't know who's in control anymore at the top. I said this to you last week. I don't think Jim Chalmers was a fan of these. He's brought them in there. People are calling for his head on a platter at the moment. And then we've got the Greens as a party, and they have exercised what I can only say is a minority in the Senate to tip Labor over and get the things passed through. So now we're not past yet. There's still some work to be done, but most of the tea leaves seem to be pointing to the fact that it is now. Yeah. So
I think what's really disappointing that they're even talking about that is that if you look at those that have got the self-managed super funds, it's our small business owners, it's, mum and dads who are going, well, we maybe can't or want to make sure that we've got additional money to retire on and kind of having that safety blanket. It's the self-employed, it's those that actually aren't typically wealthy that have actually decided that that's a great financial pathway for us, and we can have that. We can get a property, and then we know we've got that to leverage on as well when we retire, because maybe the money that they've had in super isn't sufficient. But, with these changes, what we've done is actually ruin things for the average everyday Australian.
Yeah, the problem's not for me. Like, even though there are stumbling blocks, the ones that I really feel for are the first-time buyers that have come in and they've used that 5%. Tim spoke about this. Tim Lawless from Cotality spoke about this. he said, I don't agree with the first home buyer grant of 5%, because what it does is people get in on that 5%. And when the market compresses, whatever that 5% is, they're no longer holding. So they no longer hold an asset. And so we're sitting here in this market. If the market goes back, anyone who's bought on that 5% will lose that 5%. And effectively they'll be holding nothing in their property. So if they try to get out, that first taste of the property market is we made a vast loss. It may send some of them to the wall. And that's what we're looking at, especially if interest rates continue to go up. Now, we saw them on hold last week. No one's talking about that, but they were placed on hold. So, but there is anticipated rises before the end of the year. So if you've purchased on 5%, if that's what you've got, and you've gotten into the market, and your house was 800, and it goes down 5%, which is that, that's really the bigger news. That is where the pain is going to be in the market. We're going to have lots of people who saw this as their opportunity to get in the Australian dream, own a house, basic human need of shelter. We've got that sorted, tick. Well, happy days as a result of, everyone putting their hands in their pockets and the federal budget. I'm sorry, I'm going to point at that. But if we're talking about that, and the lack of supply and demand, because it's there as well, I think I think we're going to see a lot of discomfort for first home owners. So it's been interesting. Let's put it that way.
Absolutely. And I think another thing that remains interesting, which kind of leads to our next story, Pete. Victoria still.
Oh, those poor buggers down there!
Rental reform is still coming in thick and fast for our poor Victorians.
Yeah. Have you been following? Sorry to interrupt. Have you been following Sarah Sincotta's Insta and social feeds?
Yes.
Like, obviously a proud Victorian down there. Yeah. Well, not so proud. Let's take the proud out at the moment. But she's been definitely fairly vocal in what this means. But what's the latest one? What are they taking away from the Victorians this week, Kasey?
Well, I heard this week it relates to tenants' bonds, and that they can now transfer their rental bond from the existing rental they're in and transfer that held by the government to their new rental property. Then if they in fact owe rents, if there's any damage, and then the property manager needs to do any kind of claim on that bond, that apparently can still happen. The government will then supplement.
Oh, and then are you kidding me?
The government apparently is then going to pay whatever this additional balance is, and then they fight the tenant. Let's say there's going to be a fight, because I think there's going to be a fight. That's not how it's actually been worded, but they're going to then recourse the tenant for the repayment of what they might owe over an 8-week period as a government repaid back loan.
Wow. Look,
this is going to be interesting.
On the face of it, because they've got the lease break costs of now being capped as well. But the stupid part about this is the government, this is the Victorian state government legislating over the top of legal agreements. So these are legal agreements, and they shouldn't be entered into lightly. Do you remember back in the day when we got a mobile phone contract and we had to sit down and sign it? I remember them being quite long, quite extensive, until regulation came in and said they have to be easy to read so people understand what they're doing. And now we end up with the no contract basis. But when you go to buy a car, you sign a contract. It's a legal agreement. You're signing a contract for the purchase of the car and whatever else. Can you imagine if the state government came in and said, right, you're going to sign that, and we understand most of you are going to be paying that back, because not everyone can come in and buy a Merc with cash these days. And we now leverage that against a loan. So can you imagine if the government came back in and said, at any stage you can hand that car back in, and by the way, you can only charge X amount on the tail end. We'd have car dealerships going bankrupt around the place. We would. But, people would stop. Manufacturers would stop sending their cars over here, because that's an unsustainable model. But for whatever reason, the Victorian government has found that might actually be okay because it's just mums and dads that we're screwing this time.
Yeah.
I just find that reprehensible. And I
Oh,
notice
it's just those that are making the policy. And I understand, right? You know, like we speak to those in the industry, you know, on the daily, who are on the ground, who are saying that obviously we're consulting and we're offering advice. Clearly, the government down in Victoria are not listening to those that are actually within the industry and who are explaining what happens in this scenario. Like, you don't just, not every situation or not every single vacate. And when a tenant leaves a vacate, it's not that they intend to need to owe money or there's things that are outstanding, but it does happen that they haven't understood that what the normal practices occur on the daily. To understand how in which this type of policy is generally going to impact. But more importantly, these poor Victorian property managers are now, 1 week talking about this, then the next week talking about that, then the next week having to call and say, sorry, minimum housing standards are changing again. You got to do this additional compliance. Oh, by the way, this. So I feel really sorry for them and just the types of pressures that they would be under at the moment to be supporting their landlord, but more importantly, the types of conversations they'd be having with tenants as well.
Yeah, and I actually forgot to mention this off air, but I've got an interview with Toby Ballots coming up from the REIQ.
Great!
So in only later this morning, we won't have time to comment on the back end of that, but I'm going to ask him a bunch of these and see if we can tack that on, because like the REIV in all of this, one point that I think I'd make is I don't think they're being invited into comment before it happens. I think
it's like an after effect.
Yeah, which is a real problem. If you remember back, the previous government in Queensland were doing that exact thing. In fact, they were trying. They were so scared of the REIQ that they were trying to rush it through at midnight without telling anyone, and then it'd be in the notes of Parliament the next day, and the REIQ would be reading it, going, "What the heck?" You're like totally blindsided. Now, I'm not saying that the same thing's happening in Victoria, but I really feel that the role that Toby and Jacob are executing down there is super important at the moment, and we'll talk to him about that and what that means and how they're working to try and advocate for not just the property management rights, but for the rights of the homeowner down there. I know they're doing a fantastic job.
Yeah, definitely. What's next? What's popped up on your social media? Media feed.
Yeah, last night there was a story. There's a story. Antonio Mercarella, of the CEO of the REIQ, went live to most of the social media formats talking about a change coming up that affects most of REIQ members, and that change is based on that form system. So. From around the rest of the countries, this is also pertinent to you guys because for the last couple of years, the way most of the REIs have worked is that they've had their own branded forms platform that is powered by another set of software. So in Queensland's case and a lot of the other states, that has been, let's say, Queensland's branded forms, which is called Realworks, if I'm not mistaken, here in Queensland. Realworks, that's been powered by Forms Live, which is a dynamic methods product. And effectively what's happened is the REIQ have decided to part ways with dynamic methods. So they're not going to be the forms provider anymore, and there's going to be another one subbed in. So for most Queenslanders, most Queensland property professionals, they're going to remain using Realworks will remain as a thing. But what the REIQ have come swinging out about today is, late last night, is that there appears to be people calling, spreading misinformation about this changeover. Now, there's a couple of things that I will say there. I think Dynamic Methods, as a commercial company, probably are going to lose out. This is a contract that they didn't want to lose here. So it would be in their best interest to retain business. So, we're sitting here watching this. Antonia is kind of telling us that she's had feedback from her members to say that somebody is calling. We can't we can't quite know who, but somebody is calling, spreading misinformation about the deal. So there's a couple of things that they clarified in their statement this morning. So this all happens in a few days, 30th of June, I think it is. REIQ are saying Realworks customers will continue to have access to the REIQ contracts, forms and agreements, as it belongs to the REIQ, so they should. REIQ forms and contracts will remain available through Realworks. So that's another point they're saying. Existing CRM integrations, so Vault, Property Tree, Property Me, Reap It sales will be available from launch. So it's business as usual there. Whatever the misinformation is, and I haven't been privy to one of these calls, as have you, so I'm only speculating, but what I believe has been happening is that there's been some confusion created on the call about whether those things will be available post 30th of June. And the REIQ has come out quite dominant this morning saying, yes, they absolutely will. And by the way, if you want to listen to Antonia and catch up on what that is, it's on all of the REIQ socials. You can go and hear her talk about it. But these things happen fairly regularly where a industry body changes its commercial provider, as is their choice, and they do this in the best interests of their membership. You would presume that's what they're advocating for. So, if you're getting calls and you're confused at all, I would direct you back to the REIQ to clarify whatever is you're uncertain about, and they have offered that as part of the video as well. So if you're getting a call from any kind of provider so giving you information about your forms, just go back to the REIQ and clarify exactly what's going on there. Now, in fairness, we did actually I gave AJ Chand, the Chief Growth Officer of Dynamic Methods, the chance to respond to that this morning, and he said it would be inappropriate because there is a matter before the courts. So I wouldn't allude to what that was, so I don't really know, but that's as good as a no comment coming from the Dynamic Methods team there at the moment. So just so you know, we've given the right of refusal to that other side to comment on there. And we'll follow that story moving forward.
Yeah, definitely. Yeah.
Yeah. You saw something on social media this week as well, and you sent it through to me.
I did actually. As you do, scroll through your Instagram feed and
Death scrolling.
Yeah, those ones. And just kind of, caught eye, really more so it was of the caption of that real estate agents dislike me. And I was like, oh, this seems like it's going to be something interesting. And as I'm kind of obviously listening to the reel, what actually came out about this, more importantly, I think the key message is one, there's still, of course, throughout our industry, lots of properties being listed with no price. And this particular person or this reel on Instagram talks about, what is it that buyers actually want, right? They want transparency. Why don't you just tell us the price? Why do you put price by negotiation? But more importantly, he shared a hack, and it's called the Property Seeker Chrome extension. And of course, you and I started to then have a little play to see if it actually worked.
Well,
right?
to be fair, it's been my bugbear for a while too. Like I've now stopped inquiring on properties that don't feature a price.
And it's exactly what he was saying. That buyers just don't. They just don't.
I just don't inquire anymore. And what really annoys me is when I do call up a sales agent. And I guess I'm in a bit of a different scenario because I can easily do a CMA on it myself, and I will.
Yeah.
But when I call up an agent, they go, what would you offer on this? Without me having seen it. Like, I don't know if I want to even attend your property because are we talking 2 million or are we talking 1? Where does this sit? Now, I have another mate called Jason. And Jason, I have had it out with on this. I have said, don't put a price on it. I won't inquire. And my point to him is that acting in the best interests of your seller? Now, he turns around to me and says, I can provide you with 50 reasons as to why I don't put a price on there. And for me, it's been just overall super effective at getting, buyers to a higher level of engagement price-wise. So, there is an argument both ways, and I've heard the argument from a consumer perspective and from me as a buyer, if something doesn't have a price on it, and this is shown in retail, this was my response to him, is if a property, if you walk into a store and something is unpriced, people are unlikely to take that to the register and purchase it, no matter what price they think it is. And this has even been shown to be the case. Like if there's a Mars bar, it doesn't have a price on it. People know kind of where Mars bars sit in pricing. So it's not an unknown, but they will still not take it to the register. So, this is not a house thing. This is not a car thing. This is a product thing. It's don't put a price on it, and you're probably you're going to miss out on some inquiries.
Yeah.
But, when I speak to my good mate, he just throws it back at me and he goes, you know what? I'm acting in what I think is the best interests of my vendors, and I have had huge success at getting above the expectation of price by not putting it on there. So effectively what this property seeker extension does is it gives you I think it gives you the search parameters that are entered into the REA group or domain.
Correct. And that's exactly what I was just about to say. So obviously as you go to list in the back end of those portals, it actually does, you have to position that price guide, right? You've got to go, well, this is kind of the minimum, this is the maximum, this is where we think we're sitting. And it comes upon that agent's opinion due from the CMA that they produce, right?
Yep.
Then they can tick a box to go, but what do we think the price is, and do we want to display that?
Yep. And where was I yesterday, Kasey? Where was I?
South Australia.
Yeah, South Australia are notorious. It's almost like try and find a house with a price on it down there. I don't know how they operate.
Every buyer in South Australia, download the Property Seeker extension from Chrome.
This is where I tested it. So I don't know if I've told you this, but we looked to move to South Australia. And I think the largest reason I'm not living there at the moment is I couldn't find a price on a property. Yeah, it's a damning indictment. Like that's not just me. The South Australians are probably thanking their lucky stars that I keep the prices off Peter Schravemade.
I think they did that on purpose.
Yeah, they did it.
You would have moved to Adelaide.
Had I had the property seeker extension, it might have been a different ball game. Because I just in that square that's in the city, when you look at Adelaide from a bird's eye view, in that square in the city, there's a lot of apartments in there. None of them are priced, and I could see them all yesterday, and I was actually thinking to myself, I would have purchased that back then had I known that that's where that was at. And I was going, so I see it as both ways. And I'm not going to give light to the guy that shares it. He believes that all real estate agents hate him. That's what he said. They all hate me. I was like, oh, this is interesting. I need to see what this is actually all about. Anyway, that's out there. And I've actually seen, since this came up, I've seen a bunch of technologies that are out there. So at the moment, the Real Estate Institute of New South Wales, this is one that dropped off the list this week. But the Office of Fair Trading in New South Wales are coming out saying we're going to smash anyone who underquotes. And I started laughing going, you just had that famous case and you hit him with 33,000, but all of a sudden they're going to be 120,000. Like he underquoted it or it's about 50 cases. And like that was what he got at a lifetime ban. So excuse me for being cynical. New South Wales Office of Fair Trading, when you say you're coming after real estate agents, I don't think they're quivering their boots. But one of the pieces of technology that's come out of that is there's a cool piece of technology doing exactly the same as this. It's getting the search parameters to show the REI NSW, I think, are looking at using it to prove underquoting or otherwise, or at least sharpen up on the agent skills. So watch this space. I think there's more of that coming. And here's the other thing that I point out is they're obviously getting that data from somewhere in the feed that is the portal feeds. How long before the portals hide what that is? And that becomes a lot harder. Okay, so we're seeing that now. This seems like it could be a quite a simple tech fix from the major portals to go, that information is hidden. And I don't know how they're getting it, so I don't know if it's as simple as that. But to me, it seems fairly simple. It must be a piece of code in there that they've been able to highlight and go, this is where we're gonna hone in on that. Yeah.
Yeah, I just thought it was very, very interesting, that I think he definitely does talk around about what buyers are looking for. And I think that's the key here. It's, to your friend's point, he's definitely of the opinion that he's achieved great results and he's definitely worked in the best interests of his vendors. And there may be others that have experienced some, things completely different on that side. And I appreciate everyone is going to kind of work and have their own opinion and view on this, but I'm with you. I want to, and I actually do, and it's great. Actually, Avi and I do talk about this in the upcoming interview as well. So, and he kind of puts his piece of feedback onto it. But for me, I'm the same. I at least want to know, where am I sitting, because I want to kind of know, am I going to really be able to afford that, and if or am I not? Like, is it even worth me even going to look at it? Right? Like, do I waste my time and get out of bed on a Saturday and go to 10 open homes, know that all 10 are absolutely genuinely priced out of my price point? Or do I go to those 10 knowing I'm sitting there and I've got some chance of being able to at least get one of those?
Yeah, well, I actually, because as you know, we purchased about a year ago, but during that process, I saw a lot of this. I saw one, and I won't name the location, but it was a really prominent industry person in that location had listed this property, no price on it. Now, because I have access to, a data supplier, I could see that there were 5 houses in a line, all very similar to this one, that had all sold in the last 6 months at a certain price. Now, quite often it's not as cut and dried as that, but this one seemed to be priced smack bang in that. And I called this person, didn't have a price on it. One of the reasons I called is because my desktop CMA, having not visited the property, put it at a certain price. And I got the whole, what price would you put on this? And I said, that's quite easy to answer. The 5 houses next to you have sold in the last 6 months, all between this range. That's the price range I would put on it. And she said, well, it's not even close to that.
Okay, so then what price have you put on it, agent? What have you recommended?
Could you tell me what? Because I haven't seen the property, and it's a considerable drive away from where I am. And herein lay the problem. Like, I'm looking for properties not just in the area that I live. I'm looking for them in far-flung places, South Australia, Tasmania. I was looking there as well. And not having a price on the property, like, what am I supposed to do? Jump on a plane and go and have a look at every single one when... So, I could go on about this forever, pricing on properties. But, I've heard the other side of the argument, and there are parts of that I agree with. One thing I would say is I'm not for pricing everything. There are some properties that I believe you are not acting in the best interests of your vendor by putting a price on it, because the option to move upwards is so it's there. And I would actually point it as auctions. When I get to that stage, I would point at auctions as being maybe a facility that's better open to housing that, because you get a guide, but the market decides on the day. So, we could go on about this forever. Can I talk? I know we've got the interview coming up with Avi Kahn. Can I just talk about the 2 conferences that I have?
Yeah, absolutely. I had that next on my list of, would love to hear what your takeaways were from the event. What were the speakers chatting about? What kind of came out of the event?
Well, let's go firstly to PIPA. Do you know what PIPA is?
No, actually, I haven't heard of that event.
Yeah, PIPA is the Property Investment Professionals of Australia. That's what it stands for. And I've spoken at this conference before. Obviously, we are the buyers agents, and we have buyers advocacy groups as well. We've got Rebar and a bunch of others. The Property Investment Professionals of Australia, these are guys that sell largely investment property. It's such a different vibe to normal agents. Normal, let's remove the word normal, but sales agents, I don't know why, but it's a different vibe. These people, obviously a different skill set that's involved in there. A lot of them tend to be highly analytical, but it was really good to reattend one, I think 2 years since my first one, and having seen them grown and the topics that they were raising. Really, really good. Now, I was only there for a short amount of time before I had to go, but they're doing a wonderful job there. Mike Mortlock, who is with Depreciation Survey Company, and also has MCQ, I think it's called, and then he has his podcast, a fantastic podcast, by the way. Mike Mortlock's podcast is excellent in that area. And Kate Bakos, who is, I think she's currently in the top job there, but I might have that wrong. I caught up with them, and then there's the Joanna Boyd was there, who is involved in the chapter at the REIQ. So, great conference. Everything property investment was being discussed there. My job was largely to talk about tech and where that's coming in, and we were looking at a lot of the data plays. We covered data last week, an area of the industry quite familiar to you, so I'm not going to lecture you on that. But there's some really interesting data plays coming into that property investment space, and that was a lot of that. They were asking about the technology that's entering in. We've got a lot of portfolio management in that space. I mentioned Zappio earlier in this conversation. That's they weren't there, but that's one of the emerging techs. And then the bigger conference that I went to was the Real Estate Institute of South Australia Revolution. And that was Kane Cook and Andrea heading. It was excellent. I really liked that conferences down there. They've got a different feel. And that's not. I'm not having an attack at the other REIs. There is something really homely about the feel that happens there. It is a smaller conference, and maybe that's it. Maybe you can get that kind of feel down there. But I almost got to know everyone at that conference before the end of the day, especially those who hung around at the end. But a couple of takeaways from there. They're talking about AI replacing workflows, but not people. They had Professor Toby Walsh there, and Toby's written a few books on emerging generative AI. And one of the things he said stuck with me. He produced a survey that said that Australia has incredibly low trust in artificial intelligence when compared with other first world emerging nations. Now, that's not unusual to me. We've been in the prop tech industry for quite some time. You even did some travel with us as Box Brownie, and I remember back in the day, we felt that the American public were more open to new forms of technology than the Australians were by a long way. The Australians would approach something with skepticism before trust, whereas the Americans would kind of jump in, throw money at it, see if it worked, and then go, that worked for me or it didn't. And it's just a different approach. I don't necessarily think one's better than the other. But where we currently sit at the moment with new forms emerging all the time, I think the skepticism in Australia has actually intensified, if I wanted to call it that. So we had that. Jake spoke a lot about new energy efficiency standards. NatHERS is what it's called, the National Housing Energy Rating System, NATHERS. If you're not across that, it's good bedtime reading. It's good. It'll put you to sleep. No, it's actually it's actually good to get your head around it because it's coming. It's a mandatory energy ratings that they're coming, and attached to that will be more minimum rental standards. Wait for that, landlords. We also discussed AML. Kane Cook came up with, for me, one of the quotes that I haven't heard through all the AML hype. He said, I am viewing AML as an opportunity to professionalize the industry. And I thought, wow, that's a really refreshing approach. I've heard it all the scaremongering, but really, really well put. So well done. Well done to those guys. Great conference. Thanks for having me. Oh, probably never invited back again, but thank you for having me. What do they say? Go down south is what they said.
Right.
That's their slogan down there. But yeah, beautiful, beautiful country, beautiful land down there in South Australia, even if they can't price a property yet.
Yes. And obviously we do have the REIQ Lift conference coming up in the next few weeks. So really excited. I will be there. You will be there. I think we probably may even look to have a chat live to a few of the speakers and potentially, guests to be a part of our podcast. So any of those who are listening today who are attending the REIQ event, make sure you come and see Pete and I at the event if you would like to have a speaking spot on our podcast while we're there. But also one exciting event that's kind of attached to Lift, but also a part of what you do, Pete, within the industry as a part of Reach Australia and New Zealand is the pitch battle. So talk to us about that, PropTech innovation, and what do those within PropTech need to do to be a part of that pitch battle?
Yeah, well, we've closed the applications now.
Oh, really? I was
yeah.
going to jump on and do it. 'Cause, hello.
You're too
Really?
slow.
Oh,
Too slow. Yeah. Well, we're
that's okay.
only a couple of weeks.
We're friendlies. We're friendlies. Can't I get a gig or not?
We're a couple of weeks. We're a couple of weeks out. I shut it a week and a bit ago.
Okay.
We're actually about to announce the finalists of that. So, but we put up a cash prize. We put up 10 grand to find emerging forms of property technology, and we do that every year. And whilst we're attached to technology and they're welcome to apply, this is open to the industry. It really importantly, it's independent. There are no REIQ judges. It's no affiliation between REIQ. In fact, this year one of the judges is Ines Higueras Garcia, all the way from Miami, who's heavily involved in the tech industry over in the USA. So we're excited to have her. We've got Peter Burke from the venture capital community is coming over and doing it. Ash Cullum. We'll call him Ashton. I call him Ash. Ash is coming over. He's with PropTech Hub WA, so he's bringing that side. And obviously, we've got the indomitable Antonia Mercarella as a judge back again this year. So, super excited for that. But really, what we do is as part of that is we invite a lot of venture capital players to the scene. We invite a lot of the prop tech community. In fact, the night is becoming more about community than the pitch battle itself. But one of the interesting things that we gauged last year is that every single one of the people who did pitch walked away with a major deal at the end of it. So whilst we have the winner with the cash prize and then we have the People's Choice Award as two separate things, and both of those are, they have a defined play. If you've gotten that, you've got the win of the judges or you've got the win of the people. Both of those are excellent. So that's there. But there are other people listening going, could I do will this factor into part of my business? So, I love it. I really like the vibe that's there. And then on the back end of that, we do this other thing because you watch people get up. It's actually quite a high pressure scenario.
Yeah.
This is not just a Shark Tank night where you get to pitch and you can make mistakes, but they're forgiving. This is actually pressure. You have to deliver it in under 4 minutes. That's not easy. People think that's easy. That is not easy. I can tell you, as somebody who has pitched thousands of times, that is not easy. So firstly, they have to do it in under 4 minutes. They have to do it succinctly. They're given the aid of a slideshow that's there. No video aids generally, that's not part of it. So it's really, have you gotten your point across? And a lot of this can be technical. But interestingly, the two winners from last year were both people who had quite a personal backstory to it. And the winner came out of nowhere. Not a REIQ program. A lady by the name of Suzanne Campbell from a company called Venue. I had never met the lady before that night. Just such a really concise, emotional delivery of, here was a problem we solved for. This is why we're solving it. And the judges agreed. I think both the winner of that and the person who won the People's Choice Awards was Scale Up. He had a message where his sister had been unable to purchase a property, so Scale Up now exists to assist first home buyers getting into property. So he had this personal backstory. Here was the problem I solved. Here is how we're solving for that. And that was Nick Melrose, delivered it excellently as well. So more than just a bit of fun, and obviously we have fun as part of it. It's a chance for emerging technology to get their face in front of people who might actually move them forward. So, whilst REIQ puts this on, we stump up the cash prize, we fund the thing. It really is a celebration of the technology in the industry coming together. And as part of that, I must mention that right now we're working. The surveys have closed for PropTech Collab. We had a PropTech survey out, and we're looking to do a state of the PropTech nation at the start of that, which talks about what we've found in the findings of that survey, and that's quite interesting. We won't weigh the evening down with that, but that will be delivered at the start of it.
Yeah. So Pete, do you encourage agents, property managers? Are you encouraging those that are kind of interested to learn who's emerging? If you want to know more about what tech is coming up and out, to come along.
Yeah, anyone in the industry, because don't forget, it's not all just about the the companies that are on stage. It's about the crowd that's gathered there to listen to that. And quite a lot of those affect how the industry will move forward. A lot of the real estate institutes will be there. They want to see what's coming out of the ground. So, yeah, like I would highly recommend going there. If you're interested, it's topoftheprops.com.au. You can find tickets there or any information, or just email us here at hello@beforetheweekend.com, and I'll respond to you when I can. Yep.
Yeah, and can you give us any teasers as to what's come out in that survey?
In the survey?
Yeah.
No, not just yet, no.
Okay.
So we only closed it last week.
Okay.
And we've looked at various incarnations, but yeah, that will come up. That will come up in due course, Kasey. But thank you for trying. Thank you for trying.
Hey, I thought I'd kind of get you off guard there, and I thought you might have given us a few little.
No, not yet, not yet. So you did an interview this week. I think one of the more interesting people in the industry that I wouldn't say emerging. Avi's been Avi Kahn from Ray White. He's been in the industry quite some time. I feel like he has a new lease on life, and I don't want to preempt the interview, so we'll go and have a listen to him. But yeah, having heard this pre-recorded interview, it's a cracker, and I really hope you enjoy it. But I'll throw over to Kasey and Avi now.
Guys, welcome to Before the Weekend podcast. I'm Kasey McDonald, and today I have with me Avi Kahn. Thanks for joining us, Avi.
Thanks for having me.
Yeah, fabulous Friday in Brisbane, sun's shining. We're at an event.
Yes, we are.
We couldn't ask for anything better, right?
It's before the weekend as well, so it's it.
Yeah, exactly. Well, look, I've got lots of questions here of my notepad for you. But first of all, I kind of want to start with let's learn about you. Let's learn about the Avi Kahn. And you have been doing some great things within our space in terms of, growth, your team, the businesses. So I'd love for you to share who are you so we can understand who Avi is. Yes.
So we run about 5 REIQs in Brisbane South, from Brisbane South to the west, going all the way from Holland Park, Daisy Hill, Marsden, and Brookwater. We have about 160, 170 staff members. We sell nearly 800-900 properties a year, and we manage now across the group, there's about 3,600 properties from Holland Park all the way to Brookwater. So yeah, it's all fun and games. And we've got a few other companies. We call it an ecosystem. So we have a law firm which is based out of Sydney. We have a Philippines branch which is all our VAs as well. And we have a big media company in Brisbane now, which is now expanding to Sydney and Melbourne. So
great.
Yeah, there's a lot of different things happening.
Well, that kind of leads me to my next question. Multi-offices and obviously multi-businesses that all work seamlessly together. So culture, talk me through that. It's what role do you play as a leader across all those businesses?
Yeah, look, I think it's gradually changed my role when it comes to culture. At the start, when you're a small business, it's you drive it. And then you get something's wrong, you get something's right. But as you get bigger, you find that the team actually drives your culture. And it's hard when you got like different sites and different offices because each team will work at a different pace. You've got some younger people there, some experienced hands there. So each office kind of has its own vibe and own culture. Sometimes things go wrong. I think that the beautiful thing about our culture is that the team fires someone before you even get there. And that makes me feel really good. It's not, sometimes I feel like, I didn't know about these things, but they're so protective. Even if like they're one of our best performers, the agents will always, say, hey, we want to work in this environment, want to do things ethically, morally, do things in the right way. So they're so protective of their culture. So it's always work in progress, but it's built by the team. I'm just there facilitating it. And it's just a beautiful thing now is like, they feel like it's theirs rather than the offices. So.
Yeah, great. I really like I really like that because I think, we all learn as individuals if we sort of have a bit of a buy-in and we're a part of that journey, we tend to be responsible and own it and be accountable, right? So I really love hearing that the team are also excited about that.
Yeah, it's extremely amazing because sometimes they're like, hey, I really like this person in the industry. I really like this property manager. I've been dealing with them in my sales capacity. Why don't we hire her or why don't we hire him? So that sort of stuff, it makes me feel good that they are really protective and they want to grow the company with good people.
Yeah, great. And so what's led you to expand from one office to 5 offices?
I think a part of it, like when you come in as a new leader, all you want to do is grow, right? You want another office, you want to be in this suburb, you want to be in that suburb. But it's kind of like our growth has been with the growth of our people. So they have led the growth. They said, hey, Avi, I want to open an office here. I want to do something in this area or this suburb. And then we've had the opposite effect of where, for example, 3 of our 4 acquisitions have been driven by the principles of the other business. So, hey, we want to join your business, or I want to sell, I want to retire, and I want you guys to look after my people or my clients. So it's kind of been a little bit organic. I would love to say it's always strategic. It hasn't. It's just things that have just fallen in place for us, and it's just kind of organically driven us to different areas. Now we look at it in a way that, like, we just don't want to open offices for the sake of it. We don't want to buy rent rolls for the sake of it. Has to do something with the growth of our people. So it's kind of changed as we've gone on. But nowadays it's it's more opportunities presenting themselves to us rather than us going, we need to be there.
Great. And in terms of, I guess, that leadership approach, like, how do you think that that's then evolved in terms of how you're looking at your people? You're becoming an attraction business, obviously, from what I'm hearing as well in the marketplace. But, those sales agents and or property managers, they're coming to you saying, let's go to those areas. And so in terms of how you approach that, you're doing those assessments to understand, is that where we need to be? Is that also a business we want to work through? So what would be your guidance for others that might be going through this or thinking, how do I expand, or, is that the right area for me? What are some of the things you look at?
I think the general premise is more is not always better.
Yeah.
You got to figure out, like, if you're opening an office, can you support it from the existing office? Can you create efficiencies? Can you provide growth? Are you going to be there? What does your time look like? Who's your competitors in the area? What do you take on? What's the size of the market? A lot of people don't even look at the size of the market. They say, oh, this name sounds good, we're going to go there. What's the market? Not just that suburb, but what's the 4 or 5 surrounding markets? Are you going to have transaction volume there? Are you going to have good GCI? Do you have the right people to drive that? Don't open a business when you don't have market share. Work on market share first. You can always gain market share from where you are. A lot of people opening things and saying, oh, we'll get market share just because we've got a site there. It does not work like that. That's probably like 15, 20 years ago. It's like people just drop in a local office.
Yeah.
You have to create that presence. How much money are you going to spend on marketing? Who are you going to recruit? Who are you going to move from your existing office? How does it impact your existing office as well? Because you don't want to ruin what you actually have at the moment. So there's a lot of things, different things you got to think about before you can go, let's do it. So think about it, be strategic about it.
Yeah, absolutely. Really, really big point. In terms of, I guess, the high-performing teams these days, or more importantly, a high-performing environment, because I really love the fact that you've indicated your team really helped forge this. So what's the key there? What's your definition of that in today's marketplace?
I think so going back to it, there's a few things as a leader that you cannot teach your people. So high-performing environment is a high training culture and high tech of training, of tech, and open to change. But there's one thing that a high-performing environment that you look for as a leader is motivation to do well. So look for that in your team. It's something that's very hard to teach. I mean, you can take them up to all the speeches, all the conferences and stuff, but it's very hard to get motivated people that want to do well. So a high-performing environment, you can't create that unless you get that skill that people want to do well. So that's first thing. Second thing is that, are they open to change, willing to train? So you see a lot in the industry, like, I don't need to go to that eye or that eye. Like, are your people open to the idea that it's constant training? The best industries, the best operators are always training. So we look at that when we hire people. It's like, are they open to change? Are they willing to train? Do I need to motivate them every day? So there's certain things that my team do really well. I don't have to go there and say, hey, let's do well today. They're already pumped, ready to go because they're doing something for their lives and their families. And secondly, I know that when we provide training opportunities, they will turn up. So there's a lot of teams or agencies that don't really train. So that's what we built there, is like willing to learn, willing to listen, and they do it. They have this inability to drive themselves.
Yeah, and that's a really great segue, because I also know that you're the founder, one of the founders of the original One conference, and obviously then you've taken it in leaps and bounds across the last few years, and I've certainly been a part of that, and I've been to your event, and it's really, really great. But what ultimately was your vision behind that?
Firstly, you're probably one of the only persons that's spoken twice, right? There's only select.
Yes, thank you. I feel very privileged.
Yeah, thank you. No, we feel the same that you chose to speak at our conference. But I think initially we said that everything was so combative in the industry. Like the brands were fighting, the agents were fighting. Like, what can we do to change the narrative? Even that little 1%, we know that we can't change everything, right? But we wanted to make some sort of an impact. 3 different brands, 3 different principals at the start, get together, throw a conference. And it was in January where everyone's calling Kickstarts. So we don't want to call it Kickstart, because we felt the concept of Kickstart was like something's died. So you got to Kickstart, you know, like your motorbike, you got to Kickstart, you know.
Yeah, your car's died, so let's give it a so jump the cords out.
Exactly. So that notion of Kickstart didn't work for us. I mean, all due respect, a lot of people do Kickstart events. That's their thing. But it's almost like giving extra momentum in January. So you win January, you win rest of the year. So in that concept, the conference had to be in December, but we couldn't do December because everyone's like sort of like winding down. Yeah. So we're like, what can we do in January that sort of like brings different brands together, brings the best performers across Australia together. And it's sort of like an area idea to like collaborate, network. So I think the first one we had about 300 people. It was just mainly our teams and probably 20, 30 extra seats. And the second one went to 500, then it went to 700. And last year we had 1,030. Next year we're hoping for like 1,300. We're going to make it bigger every day, every time we do it. But we think that the format of learning over one day and make it very practical, it's what we want to do. There's so many other conferences out there that do really well in what they do. But our value proposition was like one day, key learnings. You got great practical speakers across the board. And in the middle, we break it up with one motivational speaker, one business speaker that well, something different. Like we had the founder of Alice Katie there this year. So yeah, that was our concept of how can we tone the narrative of, you know, everyone's just so combative. Like you don't have to be like that to do well. The market's so big. And obviously there's always going to be that in the industry, but like coming together. And one of the best things, I was talking to one of the speakers that we're going to announce next month. I said to her is that the best thing for the speakers and sponsors is that they're networking in at night. We feel like everyone learns so much of each other, and there's so much about different brands that we don't know. And it was really good to like, you know, do it over breaking bread. So, and you know, we always find that more and more people want to come. So it's slowly getting that momentum now. But then again, you know, it might not be for everyone, but it's a great way to sort of think about what we're going to do for the rest of the year.
Yeah, and I think, you know, look, we do see it on social, right? To your point about it is competitive and it is agencies bagging agents out and like, you know, people stealing signboards and, you know, all these things that just comes out like crazy within our industry and it's just not necessary, right? And we can all sit back and have a bit of a giggle, but the reality is that every day it's actually happening. And so what I really love is that that's what the vision was. It was about we are one industry. And I like, there you go. There's the One conference. We're one industry. Let's come together. Let's all learn. Let's learn from practitioners that are doing great things. Let's learn from motivational speakers to keep ourselves energized. So, yeah, I think, you know, that's a really great way to kind of position it in market.
Yeah, I think so. I think there's a lot of negativity out there and people complain about signs. And there's always two sides to the story, right? But everything. Sometimes the people shouting from the rooftops are not the ones that are doing the right things. So that's what we try to do is like, hey, how can we tone that rhetoric down? You know? Why don't you just fall the other principle of someone stealing signboards? You know, like that's what we're trying to say. Like, why does it have to be all across the media and everyone gets a bad name or the industry gets a bad name? So that's what we're trying to say is like, let's just talk to each other as much as we can.
Yeah, great. And I think, look, I'm going to ask you the hard question around this to that point, right? Is that right now, and it's probably been for a long time, the stigma of who we are as real estate agents, right? Is that we're not great people. We don't operate fairly. The consumers don't trust us, right? Those people that we're dealing with every single day. And so what is your honest view on what is going on in our industry right now?
Yeah, it's very concerning. Like we were already, the worst trusted. Like even prostitutes are trusted better than us, apparently, and according to the surveys. So it's kind of got out of control. Like this, and it's across the groups, right? Across the brands. It's not one or two people, and it's always like one or two people who come to poster childs, and then rightly or wrongly, they have done the wrong things, and they deserve to be pointed out and saying these people are doing the wrong things by us. But everyone has that. We've had that. We let people go. Yeah, we don't want to tolerate that stuff. And it's up to us as leaders. It's tough conversations for leaders. I get that. Because you're sitting there like you're firing a $300K performer or $2 million performer. Like, what's it going to do to your bottom line? But I think there's enough people out there that we can lean on to get advice. When I did that, I know there's certain industry principles that helped me on that journey. So it's about us as leaders becoming braver. And I think the shift is happening. Leaders are becoming braver and saying, look, I can't tolerate that. It's not good for me. It's not good for our people that we have. We're not going to attract people. We're not going to attract clients. So it's a huge thing. And I think that a lot of people have shown so many positive movements towards it. These people are now becoming trainers. Yeah, like this is the concerning thing, and then leaders are hiring them to train their teams. Now, like they're ignoring what's actually happened. So that's disappointing. But it can't be fixed for one or two people. Every brand or every state. It has to be a whole collection of us. You put it together with Kasey, it's getting there. Where so many leaders are driving change and saying we can't stand for this. Like, why is this happening? And so it's good to see, and it's going to take a while for us to shift that. With the perception of the public. And a lot of the perception is correct. Especially when they're like posting all these things, taking shots at industry advocates and taking shots at each other. It's like, just lay off social media. Yeah. Like nothing good's going to come of it.
No, and I think as well, right, like the consumers don't need to see that we have a fancy watch or we drive this $1 million car. Like, they don't want that, right? Because at the end of the day, they want to know that they're going to be able to do business with a human being that's going to understand what their needs and wants are and be able to actually support them in making that decision, right?
I totally agree. It's like, how are you going to guide the consumer? Yeah. Yes, you have to show that you're successful. I get that. People want to go with successful agents, but there's a way of showing it. There's a way of doing it. Driving around with a $700,000 car when you're selling $800,000 homes, it's not going to do anything for anyone. So look, everyone has to come into this together. Yeah, but there's always going to be the undercurrent of the 10% or the 5% that actually herald these people, put them into training with their teams and showcase them, and so who knows?
Yeah. Yeah. Do you think that the problem has always been there? It's just now being more exposed because leaders are starting to see that, or the industry bodies are starting to see it?
Oh, look, I think the problems have always been there. It's probably got worse with, like people celebrating these people, like the quest to be the number one, the quest to be the highest GCI, all that stuff. Although, we have gamified things in our groups, in our networks, in our offices, that doesn't mean that you take it to that next level and just go crazy with it, right? And with social media, you can propagate that more and more and more. So I don't know what the solution is, but I think I've seen in probably the last 3 months that it's getting toned down a bit. So it's good. People are starting to realize that that's not the way to do business. But yeah, it's really odd, isn't it?
Yeah, it definitely is.
You don't see doctors going out there, I saved 5 lives today.
Well, we're definitely an ego-driven industry, let's be real, right? Like about that, we certainly are. So a couple of quick fire questions to you. You tell me, what has been your biggest mistake learning that you can share?
I think letting go of people earlier, letting go of bad performance earlier, not just bad on not selling, but bad on culture. I think the lesson I learned was from my actual teammates. I'm like a team that, you need to move quick on these things. It's always as leaders like you want to give people a go. You always, you always see the best because you see them more as your kids or your
they become a part of your family. You see them every day, right?
Yeah. So sometimes you have to get away from the emotion side of things and look at more logically. And I've decided that I'm going to try to look at it logically. And that's why I'm saying it's hard for all leaders to be in that space, because you don't see everything, because you're clouded by this emotion that, but that person was really good, or we've trained them, or but that's probably been my biggest lesson, is let go people earlier.
Great. And your biggest win or success?
I think it's as cliches as it is, but like seeing how people do well, becoming leaders in our business, being shareholders in that business, or going to open their own businesses, like that's been really cool for me to see, because you always have this little part of someone else's journey, and how can you guide them to do more and be better? Or sometimes it could be doing more is like having 6 weeks off instead of having 1 week off. So the biggest win has been seeing the rise of my people. It's been really cool to see. And, it buys them more time in their lives, or gets them better things in their lives, or sets up their lives. So that's been really cool.
Yeah, nice. Great one. Awesome. Where do you see our industry going in the next 3 to 5 years?
It's going to be crazy. There's so much change coming, like even July 1st, we've got CPD, we've got AML, all these things are coming in, the platforms are changing. We're seeing commission levels diving down. We're seeing, investors disappear. We're seeing homeowners in a panic. The first time we've seen negative equity in homes. Like we haven't seen that in yonks. So there's lots of change coming. The tech revolution is definitely here. So, how many prop techs we have, it's going to triple. So there's lots of change, but one thing that isn't going to change is the fundamentals of being face-to-face, belly-to-belly. The client relationship is becoming more crucial. Like the other day, one of my agents was saying that she actually picked her buyer up, put her in a car, and then showed her property. I'm like, wow,
that's old school.
This is how it used to be. Right?
Yeah, absolutely.
The buyers drying up. So look, there's a lot of changes there. I think it's sad because the federal government has caused a lot of own goals as well. But it's okay, because, people still need to reach their head. The industry will always survive. And, we just have to go back to the way we used to do real estate, which is get in front of people. So who knows what 2 to 5 years holds, but lots of changes, even with portals, right? Free photos, free Metaports, free iBuys, like everyone's drastically changing. So the only thing constant is that change.
Have you seen a swift change in our consumer behaviour in the last 30 days, or since the budget's been released?
Yeah, amazing change, good and bad. Like, one of the things that we're seeing is that people that are panicking the most is actually tenants.
Right, interesting.
Which is Kasey, which is a sad thing, right? Because what the government has done is they've said that we want to close the gap. Create more generational wealth for the younger people. But what they don't realize, people need to save to get a deposit, and then in order to get a loan. Now, if you're saying to a tenant, like, okay, you owe $60, $70 up every week rent, it's taking away the ability to save. Their disposable income is sort of disappearing, which I think is basic economics that you and I understand and the industry understands, but I don't think the government does. So there's a lot of panic in tenants whether they can ever buy a house now. What are they going to do? How are they going to afford rent, because the rent's going up? So we're seeing a lot of panic on that side. We're seeing investors trying to figure out what their house is currently worth in the market now. We're seeing investors saying, hey, can I increase the rent by this, and this? So what does the market say? They're going to go with wherever the market is for rents, right? So we're seeing that side of the equation. We're seeing a lot of homeowners second guessing whether they need to sell, upgrade, downgrade. They're all like sort of waiting. So there's been a lot of change. Buy inquiries down by about 30%, I would say, across the board. You're going from 10 inspections down to 2 or 3 inspections. Agents are having to work harder to sell a house, which is not a bad thing, but you can't sell anything for 16, 17 days like you used to average. Now it's 40, 45 days.
Right.
So we're seeing drastic changes across the board on different sets of, whether it's tenants, investors, homeowners, buyers. So yeah, it's drastically changed that. Like auctioneers don't have as many options at the moment. Photographers are panicking as well, because what happens, and am I going to get enough business? Brokers are seeing their businesses go down. So there's a lot of changes, that the flow-on effects of a bunch of changes that I don't think the government's factored in.
And probably so quickly.
it's been drastic. It's been drastic. So, and it's just like COVID, right? It was drastic. Everything after 2 weeks and then everything boom. So it could go the other way, and like, you know, so the only thing constant is the change, which I say. So it's an interesting time.
Yeah. What's the one piece of tech in your business you're loving right now?
Oh, we've actually created new tech in our business.
Okay.
We're looking at, like, we're thinking about this way. All the tech is focused on actually finding business, like, whether it's like propensity of calls or texts, but there's nothing that actually takes a listing from A to Z in a proper manner. So everyone's relying on Mondays or Trellos, but there's nothing out there that actually helps people transact. So that's the tech where we have, is like, we're actually helping people transact, and all the steps are covered and nothing's missed. Client communications with their vendors can actually see what you're doing in real time. So that's what we're enjoying. And that's new to us. But yeah, I mean, there's a lot of tech out there, but like, what actually enables you to create relationships and what disables you from creating relationships, that's what principals and agents need to realize. So go with the enabler rather than the disabler.
Yeah. And my last question for you, if you are a key influencer in this industry, but if you could make the one influential decision for our industry, what would that major change be and why?
Easy on this one, because I've actually written an article on this. I would kill price guides across Australia.
Okay.
So one of the things that, you know, people sit down and do price guides and things is everyone's wrong. It's like you leave a glass of milk outside, you walk away after 2 hours, it's expired, right?
Yeah.
That's just like predicting price, comparative market analysis. You sell something down the road, 2 days later, someone sells something for more. That's what the street's worth. So why do we have price guides? Because it's expired.
Yeah.
And if you take away price guides in New South Wales or Victoria, you solve all these underquoting issues. No one knows what the price of the house will be. The only person that's right on the price is the eventual buyer. The agent is dead wrong. The owners are dead wrong. We know that, right? So the market dictates the price. So if I could change anything in Australia, I would bend the price guides, and that would solve underquoting overnight. The best thing to do is don't quote at all. No one knows. You know? Like, it's crazy.
Take it to market, get your buyers through the door, and get the feedback.
And make it traditional real estate. See what people are willing to pay for it. It's not like selling a can of Coke. You know, it's a very different ballgame. So,
well, you can buy a can of Coke at that shop for $1, or you can go to that shop and buy it for $6.
There you go.
Yeah?
There you go.
There you go. Yeah. That's the same philosophy.
But so that's what I would change. But I don't think we're ever going to get there, because different sets of governments and different philosophies between the left and the right, and they're even mandating publishing reserves, which I'm like, how do you do that? What's the point?
Yeah, so lots of changes happening in our industry, but, some good and obviously some questionable. I won't say bad, I'll say questionable. But I think I've thoroughly enjoyed chatting with you today. Thank you so much, Avi, for being with us, sharing your insights, your learnings, your successes. And I wish you and your business and your team the utmost success for the rest of the year. And I can't wait to hopefully I get a third gig at the one conference table. So,
What a pitch. Before the weekend pitch.
Before the weekend pitch, just to get onto the conference. No, thank you so much.
No, thanks for having me.
Thanks, everyone. Happy listening. Thank you.
Great interview, Kasey. Thank you very much for taking the time out of your week to do that with Avi Kahn. And also big thank you to Avi for generously donating his time to answer those questions. What was your standout?
Oh, look, I think for me, Avi has just got this nature, like when I was just talking to him, like everything was just so calm, collected. But the big thing for me was when we were talking about his leadership and the growth of his business, but the culture and how he hasn't just gone from, well, we've got one office to now 5, and how he's been incredibly strategic about what that growth plan was to get to those levels. And he did share, that, some of those have been certainly mergers and acquisitions, and there've been those that have come to him and his business. But more importantly, he has made mistakes in the past about how he's hired and potentially not fired fast enough. And he's now changed that. And he wants to be an attraction business. But he allows his team and empowers them to say, well, what are you looking for? And what are the next phases of your career? And he supports them on that journey. And sometimes he's grown because they've said, I'd love to be a part of that. And how do we do this together? So I just think, how he really articulated that and maybe, sharing those learnings of his mistakes and how he's gone, I need to do this better. I need to support my people better. I need to train them was a big thing that he said, right? That importance of training, consistency, and where he, as a principal, has to show up and how he acts and how he behaves resonates down to the rest of his team. So I think he took a lot of responsibility and accountability as to what role he plays in owning a real estate business and what it means to be that within our industry. So I felt he was just, so calm and collected, but incredibly proud of his people and the business that he's created.
Yeah, and he also had a go at the price guides. He said he'd abolish them. Yeah, he also had a comment about artificial intelligence and that it should create more human time. That's what it should be serving. I 100% agree with that.
Yeah.
I thought his comments on the current market echoed what we had discussed earlier as well, which is great. But I think the thing that struck me the most is that, despite the fact that he's running 5 offices, 170 staff and nearly 900 sales a year, he kept coming back to the same thing, whether it's culture, leadership, relationships or technology, everything came back to investing in the people. And, we're hearing that was a feature of REISA Revolution. That was also a feature of PIPA. If there was a current theme of my week this week, is regardless of what's happening in the market, it's all about the people. And probably a good place to leave the today's episode of Before the Weekend. This is episode 7, by the way. We've clocked over 1,000 listens so far in the 7 that we've had. So, there's obviously somebody out there listening to it, unless you're hitting play every 5 minutes in the car, Kasey, listening to yourself. But so big thank you to anyone who's listening to this. We didn't start this thinking that we would have an audience or any person listening to it. So the fact that there are actually people out there that find what we're talking about interesting, we're flattered to hear that, and we hope that we can keep bringing you the content that matters. Now, if there's something that you wish to discuss or you think we need to talk about, or there's an issue that you see, hello@beforetheweekend.com is our email address. We're also on socials. Obviously, Kasey McDonald Tutaki is out there somewhere. Peter Schravemade's my name. You can find me on most of the socials that are out there. And if there's anything that you think we need to cover or if you've got any feedback, we're always happy to hear it. But you can find us on any of your podcasting channels. I noticed that 50% of our listeners are on Apple iTunes at the moment. There's a large percentage on Spotify, and then it kind of goes into the minors after that. So thank you to whoever is subscribed and wherever you're listening to us from. And as you head into the weekend, both Kasey and I wish you the very, very best and happy hunting in whatever you're selling, leasing, negotiating. I hope maybe you've got the weekend off. We're coming into a holiday, are we not? Are the school holidays happening?
School holidays, absolutely. But yeah, look, what a fantastic week in the industry. Thanks again to Avi Kahn for dedicating his time to have a chat with me. And I think that's a wrap for us today, Pete. And I think we both deserve a beer or a glass of wine maybe this evening. Yeah.
Yep,
so happy selling, everyone, and happy leasing for those that are working over the weekend. And we will see you next time on Before the Weekend.
Ciao. Bye.
Before the weekend. Before the weekend. Before the weekend. Breathe it out.